huge demand for silver, not as much for gold, but I really do believe when you look at how much gold is being accumulated by the biggest money in the world, that is where we ultimately want to be. And by buying silver at an 80-to-1 ratio, when it's coming out of the ground at 7-to-1, is an opportunity of a generation.
It's a huge arbitrage play. I'm going to stop you right there for just a sec. People that trade these markets professionally look for arbitrage. They look for minute price differences between, say, London and the US, or what they think is going to happen in the next couple of months. So the smartest money looks for exactly what you just said, the opportunity for one undervalued asset to another, and the ability to get into one and take advantage of that when that relationship corrects. So when we're talking gold silver ratio, that's been out of whack for a number of years, Andy, and it's huge.
It is huge. And I remember the first time I noticed it being out of whack in 2010. The ratio was 85-to-1. And I remember looking at a chart and realizing, my God, this is like the second time in human history, 5,000 plus years of recordable numbers, that it's been this high. And I started telling people this when I started doing podcasts, hey, switch your gold to silver right now at 85-to-1. Within 7 or 8 months, we were at $50 silver and $1,920 gold. That's 37-to-1. You would have nearly tripled what you started with if you switched back into gold at that point. And this is where I see us right now, an asset that is so demanded in a green and digital application, or a growing list of applications, along with the fact that it's becoming harder and harder and harder to find in nature. Keith Neumeyer keeps talking about a 7-to-1 mining ratio. So it comes out of the ground at 7-to-1, and yet it's priced at 80-to-1. This is an opportunity that I think is crazy to ignore and to.
Hey everybody, it's Rob Kientz at goldsilverpros.com. It is Wednesday, December 29th, 2021. I can't believe we're almost at the new year. I have a very special and one of our most popular returning guests. It is Andy Schectman from Miles Franklin. Andy, how are you doing today?
I'm great, Rob. Thanks, buddy. Yeah, the year has flown by. The last 2 years have been just a breeze. Like, it's crazy how fast 12 months go. And it's good to be here with you, though. And interesting to see what 2022 has in store for us as well.
Yeah, the reason I wanted to have you on was to talk about the physical market. I think we need to revisit that. We've been talking about a lot of other stuff lately, economic data, inflation, the Fed, but I want to get back to looking at the physical trade. I know you're connected to that every day, you know, as a major retailer here in the US, and your connections throughout the industry. So it's perfect time before New Year's to kind of do that. Look at what happened in 2021, what we think may happen in 2022. And we're also going to talk a second about the housing market. We got another piece of data. I did a live stream last night on the housing market decelerating. Got another piece of data that came out today. We'll talk about that. Before we do, though, I wanted to share with everybody, we have revamped our website. We originally wanted to have that done for next year, but we got it done a little bit early. So if you go to goldsilverpros.com, you will see the new interface, and I think it's looking pretty snazzy. It's a lot simpler, a lot more mobile friendly. And we have a couple of things that you guys may be interested in. If you click on join our free newsletter and put your name and email address there, we have a very special weekly newsletter that's brand new that will be coming out starting in January. We're doing some collaborations with some other influencers to bring you guys the best information, the best charting on gold and silver. And that will be free to you guys. It doesn't cost you anything. That's just a value add we'll be bringing in January. But since we have Andy on, I want to let everybody know that we do have a relationship with Miles Franklin. So if you're interested in getting your precious metals from Miles Franklin, you will get the best deals possible if you come through the website and click on Get Access here under Miles Franklin. And all you do, go to the top, click on Precious Metals Deal, click on Get Access on Miles Franklin, fill out this really quick form. It'll email those guys over at Miles Franklin, and they will contact you within 48 hours. So Andy, tell us a little bit about what deals you guys may have going on, or what are you offering to your customers right now?
Well, first of all, it's a great honor, Rob. I take that very, very seriously. And before I do that, I just want people to know a couple of things. We still are doing things old school. We don't use an online platform yet. Our website certainly hasn't been built as quickly as yours. We are revamping ours and rebuilding ours from the ground up. We've got the whole back end done now, and that's the hard part with the precious metals site, is the hedging and the inventory allocation and all that kind of stuff. I'm very, very hopeful that by the end of January, we'll be up and running on our new site. I thought it would have been done 2, 3, 4 months ago. It's really been a challenge and a source of aggravation for me. I guess you could say we're still analog in a digital world. However, I will promise your listeners the very, very, very best price in the country on anything that they're looking for. And that's really important to me, and personal service. And for those out there who don't know what we're all about, we're licensed, we're bonded, we've never had a customer complaint. We're one of only 24 US Mint authorized resellers in the world. The licensing and bonding in the state of Minnesota, where our corporate office is located, is really the big difference maker. I guess it's what separates us from the crowd. It's what holds us to a higher standard. And certainly working with you, to me, holds us to a higher standard. And that is something that I take very seriously and have great respect and appreciation for that. So thank you for that. As far as what we're offering, you know, supply, Rob, has been a great challenge, maybe a greater challenge than anything I've ever dealt with in this industry. We have a system now where you have to basically purchase product 60 to 90 days in advance. You have to hedge it. You have to pay in full for it. You have to pay high premiums. Then you need to run logistics as it comes in. And with that, we've seen a greater expansion of interest into the mainstream. So 50,000 ounces of silver doesn't last but a few days any longer. And so it's a constant rotation. I think if you're looking for things to buy, there are 6 major mints in the world: US, Canada, Austria, Australia, South Africa, United Kingdom. Those 6 mints are synonymous with liquidity and quality. Any of the 1 ounce coins, if we're talking silver or gold, issued by those 6 mints will be a really, really good place to start. Right now, I have 50 or 60,000 silver eagles in stock that have been sitting on my floor most of 2021 because I've had a real hard time getting behind recommending them. I am a US Mint distributor, one of only 24 in the world as an authorized reseller, yet I look at the silver eagles and see the dichotomy, the difference in price between those and the other 5 mint issued coins. And I have a real hard time recommending them. And I wonder, is this the new reality? It's been 2 years since the silver eagles have come down or have gone up, rather. In 2019, in November, if you would have bought silver eagles from me, I would have charged you $3.19 over the price of silver. 4 months later, in March, I'd have paid you $11 over if you sold them to me. And since that day, they've never come back down. Really, they haven't. They've vacillated a little bit, and I wonder if that's emblematic of what's coming in the future. Right now, we're selling, as an example, 2022 silver Kruger-Ads, and I think they're a great buy. And they're $4.09 over the price of silver. And you know, the choices are becoming more, in my mind, dependent upon what's available and what is the premium. And you know, 50,000 ounces can sell out in a day. So whether you're buying a 1,000-ounce silver bar, a kilo bar from Val-Canby, or anything from the 6 mints, or a 100-ounce bar, or a gold eagle, or whatever it is, we will direct people into buying things that will provide them liquidity, flexibility. We will not recommend things that are esoteric or rare unless that's the path that they want to go down. Our goal is to get everyone out there the most amount of gold and silver as possible for the least amount of premium without being penny wise and pound foolish. As an example, I can offer you a 1,000-ounce bar at $1.50 over the price of silver, or whatever it is. And you have to ask yourself, is having a 1,000-ounce bar at $1 per ounce saving over a kilo bar commensurate with, is that savings commensurate with the loss of flexibility and utility? These are the kinds of things we will discuss with people, because there are things more important than just price: flexibility, demand, liquidity, utility. What are your goals? What are you trying to do? Are you trying to ultimately go from gold or from silver into gold when the ratio corrects? Are you playing the ratio? Are you looking to protect yourself if things get really crazy? You need to have utility to trade or barter, or do you just want it as part of a hedge to your portfolio? There's different rationale involved and different product involved to fit that rationale. And these are the things that we will help you with. But I will always tell you that we are going to stick to things that are very well thought of, very liquid, very sought after within the industry. So not to sidestep the question, what things are we selling? We will only sell things to people that will allow them great liquidity and great flexibility, and try to tailor what it is they're trying to do with a product that fits that objective like a hand in glove.
All right. And I know that if people get on your mailing list, they do, because I'm on the mailing list, you do get specials when they come out. So get on Andy's mailing list.
There will be one today also. The 2022 Crew Brand will be coming out today.
Awesome. So Andy, the main reason I had you on was because you're connected to physical market. You know people that deal with the COMEX. You know big purchasers. You know the way the winds are blowing in the physical. And it's not often reflected in the price. We've talked about the derivative pricing mechanics on COMEX and in the London market for how you determine spot price. We know it has nothing to do with physical demand whatsoever. It's speculation on a contract 2 or 3 months out for big players who only want to make a few cents or a few bucks a contract. That's what it is. It's basically day trading gold and silver. But talk about the actual physical market, because I think, you know, last year and this year we had 2 really big events. Last year we had the pandemic in which people came into precious metals. This year we had silver squeeze, and I would argue probably with inflation is probably a third one that people are starting to get worried about persistent inflation. What have you seen in 2021 as far as physical demand for silver and gold? Is it stronger? You know, was it better than you expected? What was 2021 from your perspective?
The craziest year I've ever experienced in 31 years. I thought there's no way anything could take 2020. When I say this comment to you, I'm sure it's easy for people just to gloss it over and go one ear and out the other, but honestly, my entire staff has worked anywhere between 12 and 18 hours a day, 7 days a week, every single day. I took the last week off. In fact, I came on this show and I was on with 𝙎𝙀𝙇𝘍 just before this. It's pretty much the only thing I've done in a week, 10 days, because I haven't taken a moment in 2 years. And when you build something the way that we have from scratch, you live for a moment like we've seen, or a 2-year period like we've seen. It's beyond my wildest imagination. And yet it's just a very small sampling of, I think, what is to come. And I say that to you because we've seen through silver squeeze, as an example, an expansion into I don't even want to say into the mainstream, but a greater awakening by a larger segment of people into why they need to own precious metals. And so it's certainly growing the pool of people that are buying, and the amount of effort it takes to service those people. I don't think we've seen anything yet. There will be an event, a seminal moment where people wake up and look around them and say, my God, where do we put our money when things start to deteriorate or break apart? And if you can't see the value in precious metals, you're really not looking very hard. And I think that the people who have opened their eyes early are seeing that. In terms of allocation, we did more business in the first quarter this year than we did in many years past. So it's really insanity. Probably 94-95% of every order that we have done, I think was the last calculation about a month ago, was in silver or had silver in it. Gold should not be ignored, but I think silver is the value proposition of a generation. And you know, guys like yourself and Chris Marcus and the silver squeeze guys and David Morgan, and you know, they're all talking, I'm sorry, Wall Street silver, I should say, not the silver squeeze guys. They're all talking about the value in silver, and it's really hard to ignore, not only from a supply side, but a demand side, a utility side, everything in silver, you know, the diminishing availability of it in the ground. I mean, it's the buying opportunity, the value proposition of a generation. And I think people are those who are paying attention realize that there are very few things that offer the potential return and value and an asset that is under half of its 1980 peak. that silver does. And that in and of itself has been the hardest thing for us to continue to get copious amounts of silver in the door. I would like to say that ultimately I do believe gold will be the place to be. And you and I have talked about, and no one's done a better job at talking about the Basel III classification of gold and how it plays out. I think when you see the massive accumulation by the central banks of gold, by the commercial banks, by one trader on the COMEX right now who holds 4,000 ounces or 40,000, sorry, 40,000 COMEX contracts, 4 million ounces of gold. You know, I think that the place to ultimately be is gold. However, the pathway into getting there is found in silver. And I think people are waking up to that. So massive expansion into a larger segment of the population, huge demand for silver, not as much for gold, but I really do believe when you look at how much gold is being accumulated by the biggest money in the world, that is where we ultimately want to be. And by buying silver at an 80-to-1 ratio, when it's coming out of the ground at 7-to-1, is an opportunity of a generation.
It's a huge arbitrage play. I'm going to stop you right there for just a sec. People that trade these markets professionally look for arbitrage. They look for minute price differences between, say, London and the US, or what they think is going to happen in the next couple of months. So the smartest money looks for exactly what you just said, the opportunity for one undervalued asset to another, and the ability to get into one and take advantage of that when that relationship corrects. So when we're talking gold silver ratio, that's been out of whack for a number of years, Andy, and it's huge.
It is huge. And I remember the first time I noticed it being out of whack in 2010. The ratio was 85-to-1. And I remember looking at a chart and realizing, my God, this is like the second time in human history, 5,000 plus years of recordable numbers, that it's been this high. And I started telling people this when I started doing podcasts, hey, switch your gold to silver right now at 85-to-1. Within 7 or 8 months, we were at $50 silver and $1,920 gold. That's 37-to-1. You would have nearly tripled what you started with if you switched back into gold at that point. And this is where I see us right now, an asset that is so demanded in a green and digital application, or growing list of applications, along with the fact that it's becoming harder and harder and harder to find in nature. Keith Neumeyer keeps talking about a 7-to-1 mining ratio. So it comes out of the ground at 7-to-1, and yet it's priced at 80-to-1. This is an opportunity that I think is crazy to ignore and to pass up. I wouldn't tell everyone to sell all their gold, but if you're looking for a speculative play with a very strong probability of it working out in your favor, it is to consider trading your gold into silver, riding out that ratio until it corrects, and then switch back into gold if you should so desire. And to me, it's one of these once in a generation opportunities. And look, I don't like to throw around the phrase once in a generation and it not have meaning. I'm dead serious about it. There are very few times where you can find the value, the utility, the supply side fundamentals, the demand side fundamentals, all lining up in perfect symmetry. This is one of them.
Yeah, I agree with you. Before we get into next year, we want to talk about next year as well, because I think it could be a potentially explosive year for the precious metals, but not in the sense it's been the last 2 years. There were individual events that caused people to raise their awareness, like the silver squeeze and like the pandemic for the precious metals, like you talked about. I think where we're heading into is the obviousness to everybody of the monetary debasement and the fragility of the system, where they're going to go in and stay in. It's not just going to be an event. It's going to be sort of a lifestyle change for people. And one of the things that's going to change, I think, is investment in real estate. So let's look at real estate. Last night on the live stream, I was talking about real estate. I was talking about all the data that was coming out showing that real estate was decelerating. It's still in a growth mode, but it's decelerating. The Case-Shiller is down. Now, year over year, October to October, you're still up 19.1%. Average US real estate's pretty good, but it's lower, and it's the third straight month it's trending lower. That's a trend. 3 months of decrease in home prices is a trend. Last week we came out with a couple. If you wanted to look at the existing home sales, they were lower than expected here, 6.46 versus 6.5. If you wanted to look at The new home sales, they were lower than expected, 744 versus 766. Well, today we got another one. Here's a fourth data point. Pending home sales, negative 2.2. Previous month, they were positive 7.5. Home sales have actually gone negative, pending home sales, before anything else. The real estate market is slowing down. Not only that, but for the last couple of months, our inventories in the US have been rising, more supply than demand. All of that is going to put downward pressure on home prices, right? And but what is the big thing that's putting downward pressure? It's rising interest rates. We're going to get rising interest rates. The Fed announced it. They have to do it because of risk in the system, because of inflation. And we know that's here to stay. We're not going to see inflation subside anytime soon. Commodities prices are up, producer prices are up. So as interest rates rise, Andy, for people to afford the same amount of home with their same monthly budget, prices have to fall. This has always been the relationship. It's inverse. Rates rise, prices fall. So what happens when billions and potentially trillions of dollars in equity disappears from people's homes, right? Where do people turn? You know, what's the asset that's going to hold its value? I believe it's going to be the precious metals. So with that thought in mind, we're seeing pressure on the stock market, pressure on the housing market. What does 2022 look like from a precious metals perspective? Are people going to start rotating in?
You know, I wonder, one of the things I've always liked about talking to you, Rob, and calling you when I have questions, which I have, is the things that you talk about are rooted in logic. And I cannot argue with anything that you're saying, but in the back of my mind, I wonder, how high can interest rates go? I mean, you have the perfect storm brewing, that's for darn sure, when you realize that stocks, bonds, and real estate are all at all-time highs. When you talk about what keeps people sane nowadays in the midst of all of this insanity, is the fact that their housing prices, their home prices have never been higher, that their 401ks have never been higher. Certainly that's important. If interest rates rise, what does that do to the housing market? Well, it kneecaps it. What does it do to the bond market? It crushes it. That all pulls down the stock market. Is it the perfect storm waiting to happen? My question is, or my thought is, can they really let interest rates rise? You know, when we talk about inflation, it was Paul Volcker who raised interest rates to 20% nearly in 1980. And that stopped inflation in its tracks and killed the gold bull market. But you try to raise inflation or interest rates rather, much past 3%, like they tried in 2019, and the whole system went into convulsions. What happens? I will say this, though, that this is the problem, like in Austrian economics, the crack up boom, where the misallocation of capital and resources creates this environment where people's housing, their homes have doubled in value in a year. It's not sustainable. And so what happens when the price starts coming down? I think it's a religious experience for an awful lot of people, especially those who bought late in the cycle. But I wonder at what point do they give in to the reality that if they let interest rates rise too much, that the whole system busts apart? And so I follow your logic, but I keep hitting a wall in my mind. Like there's just no way they can really raise rates. Is it token? Is it lip service? Are they just trying to appease the market by saying we are going to fight inflation? Because just about everything they say they're going to do, they don't do, and or they say is going to happen doesn't happen. So it's the right rhetoric, certainly, because inflation is getting out of control. But when you think about it, who's benefited from the inflation? The wealthy. Their asset prices have gone sky high, and the poor are getting poorer. They can't even put food on the table or drive to work and back without it being one day's wages. So I don't know how to answer that question. I see the logic in it, but I wonder just at what point, when does the rubber meet the road, where rising interest rates completely collapses the system? Now, I guess where I find a pathway to your logic is there an event? Could it be Saudi Arabia announcing, now that they're have a relationship, a military relationship with Russia, the way Nigeria does as well? Could it be an opening up of oil in other currencies other than just US dollars. Would that be the seminal moment where the flood of dollars comes home just at the worst possible time, as we're already experiencing high inflation, and bang, interest rates spike on their own and the Fed can't control it? I guess my question back to you is, do you think the Fed can really allow interest rates to rise above 3%? And if your answer to me is yes, then I would say then it creates a real big issue for people in their homes. And this is that type of moment where people say, where do I go? And if you can't see it right in your face that it's the only asset class, precious metals, that are not wickedly overvalued, in fact, they're massively undervalued, then I think, you're not paying attention. But I think those who are in an event like that will come running in droves to a market that is struggling to find supply. And that's when this market will be defined by the inability to source product readily. And that's when $9, $10, $11 premiums that we see on Silver Eagles will be commonplace on everything. So
it'll go higher than that, I think.
Yeah.
I think you hit the nail on the head, Andy. It was a bit of a trick question I posed. Yes, they can't raise rates because we saw what happened a couple of years when they did it. And Powell wants to do it. Powell doesn't believe, like the previous central bankers, to his credit, one of the reasons he was put in there was to slow down the system and say, put a governor on it, if you will. We can't drive 110 miles an hour all the time. We're gonna careen off the road, especially when we hit a wet patch. The problem was they brought him in 50 years too late. They should have done it back in the 70s. They should have continued what Paul Volcker did late 70s and 80s. And brought in a guy like Powell to put the reins on it. But see, that didn't serve their interest. It didn't serve the government interest. They needed quantitative easing. They needed expansion. They needed to run deficits. That was the way the system was designed. To answer your question, they're going to have to raise interest rates like you said, an event. It's going to be an event. I believe the de-dollarization that's going on right now that you talked about in the oil and dollars is already happening, but the public isn't aware. But when Saudi Arabia or somebody else publicly announces it, it's going to matter. I think it's going to matter when inflation hits double digits next year. I mean, I've been calling inflation. I was one of the few people that's been calling inflation since January, and it's here. And I'm calling right now, we're going to have double digits official inflation next year. If you look at shadow stats, it's already 14, 15%, but official CPI is going to hit double digits.
It's already growing month over month at a double-digit rate. I think it was up 0.9% this last month. So you're right. I completely agree with that. 100%. I do.
And what happens is, with all the debt load everybody's carrying at every level, you're not going to be able to service the debt. The zombie companies, according to BIS, are highest level in history right now. And according to the BIS, the lowest percentage chance that they ever recover in history since they've been tracking this. We know the economy is basically dead man walking at this point. We know it. It's when that seminal event comes is when you're going to have that deflation. So you talked about crack up boom, melt up, those types of things. You're going to have that deflationary pressure. You're going to have the Fed come in and do the helicopter money. You're going to have that last melt up, I think. This is my own opinion, and then it's going to crash. And I think that they are going to try to raise interest rates. And I think that's going to cause the whole, to try to deal with that. And that's going to cause the whole system to crane off the road, because while you could have done that during the Volcker era, you cannot do it now. You cannot raise interest rates to 18%. I mean, the economy would, disappear overnight. So I think you perfectly described the conundrum. And I think that what that means for precious metals investors is, I think we have some time before all this plays out. It takes some time for all of this to play out in a major world economy, but you don't have that much time. And if you look, let me wrap up my view of precious metals, Andy, and you probably will concur with this. If you look at the amount of precious metals taken off the market the last 2 years, there isn't a lot of supply left. It appears as though there is on the COMEX, but that's a paper market. That's false demand. That's speculative playing the prices. It's playing poker at the table, but not playing with real money, playing with plastic poker chips. The actual silver and gold to some extent, but more so silver, is very, very thin. And any shock to the system, is going to evaporate supply very quickly. So if you're watching this and you're thinking about getting into precious metals, don't take a year to think about it. Don't take 6 months to think about it. Come to the channel, listen to what we talk about. We'll prepare you guys for that. But the time to get into precious metal at current prices is ending. We're going to, I don't think this is going to go on for very long. I'll get your thoughts on that. Not from a date perspective, but from a milestone perspective, how much longer do you think this can run where we have really cheap silver, Andy, you know, relatively speaking, I don't think this is going to go on for more than another year or so before prices really start to move up.
One of the things that you said is the offtake. You know, when you realize that misdirection is so pervasive in this industry, where the biggest money in the world has pretty much been given carte blanche by a scam of regulatory officials, a sham of regulatory officials that allow, with a slap on the wrist, to control these prices. I mean, there's a reason behind it. I think gold and silver are the canary in the gold mine, the canary in the mine shaft. They don't want prices to take off, yet at the same time, their actions betray their rhetoric, as JP Morgan paid a $920 million fine for manipulating the price of metal, but at the same time accumulated, by Ted Butler's estimation, 1.1 billion ounces of silver and almost 40 million ounces of gold. You're talking massive quantities, the largest physical position the world's ever seen by his estimation, and at the same time paid what amounts to, you know, less than a 1 month in profit fine for their entire company for doing so, and is still allowed to be the administrator of the largest silver trust in the world. Something's going on, but the actions are betraying the rhetoric. You see one trader on COMEX controlling 4 million ounces of gold. That's almost $8 billion worth of gold. You see huge offtake by China, by Russia, by India, by Serbia, by the Bank of Austria, the Dutch National Bank, Bank of Poland, Bank of Turkey. They're all loading up on it. They all are. And yet people say, well, why doesn't the price go down? And it's because COMEX is a farce. And it's very difficult for most people to understand that, because most people believe that the markets are fair and balanced and not manipulated. And as Chris Powell often says, there are no free markets anymore, just manipulations. You have to take a step back and see what the biggest money in the world is doing. It started with the Basel III classification of gold, and it has gone for the last 4 years to really since 2017 in my book, to the biggest money in the world is using the manipulated paper price to reposition, to de-dollarize. And, you know, I forgot what was his name, Hemingway, I think, when they asked him how he went broke, little by little, then all at once. And that's how it's going to happen here. It's going to happen where the price will creep little by little, the rationale for doing it little by little, then bang, we're going to wake up all at once. You know, I was watching, I remember the World Monetary Organization and Bill Gates and all these guys did this deal on a pandemic simulation in 2019. And interestingly enough, their one appeared shortly thereafter. And their latest simulation is on a global cyber attack. 11 countries, the BIS was there, the IMF was there, the World Bank, Schwab was there. I mean, they're all there preparing for a global hacking simulation. Does that mean that's in our future? Powell just came out and said it's the biggest threat to the system, cyber threat. You know, what happens if something like that happens? Talk about a seminal moment. What if Bank of America all of a sudden got hacked, or Coinbase got hacked? What would that do for the confidence, the cumulative confidence in this system where everything is digital? And all of a sudden, if 1% of the public wakes up who has money in those types of digital assets, says, my God, we need to get out, bang, metals prices go to the moon. Or even if they don't go to the moon, the availability dries up completely and totally. I think there are lots of threats out there, whether it be what's happening between Saudi Arabia and Russia, whether it's a cyber attack, whether it's more inflation, whatever it is. I think people need to realize that you need to look at gold and silver not as an investment, but as wealth. In a period of great uncertainty, look at it as wealth, put it away, hope you never need to use it, be damn glad you have it if you need it, not just for an opportunity or for an emergency, but an opportunity too. All these asset classes are way out of whack. And when you find them come into fair equilibrium through whatever mechanism brings them to that price, there will be a lot of value out there. And so whether it's for an emergency or an opportunity, you'll be damn glad you have it. If not, you give it to your children or your grandchildren or a charity or a church or whatever. The point of it is that I think people really need to realize that where we are in the system or in the cycle and how overvalued asset prices are, all measured against inversely against a rise in interest rates, there will be that moment, and whatever triggers that moment, it's going to be a religious experience, because the three pillars of wealth in this country, stocks, bonds, and real estate, are all at all-time highs, and for the first time ever, they're all positively correlated to each other and inversely correlated to a rise in interest rates. It used to be stocks and bonds were inversely correlated, not any longer. Interest rates rise, all three get kneecapped, and this is, or at least both do, and the real estate market, as you're talking about, will come right along with it. So these are the reasons to own gold and silver. And then you throw into it how tenuous the supply side of it is, and the massive amount of demand we've seen in the past 2 years, which is only a sliver of the public. It's a perfect storm waiting to happen with no way out. And to me, there'll be crypto people out there who say, well, that's a way out. And I don't agree with it. I think it's been a hell of an investment. I really do. But I think there are a lot of things lining up, including government legislation and edict to combat that. I look at gold and silver as really the only way out of the matrix, and as wealth. And I think that's why people need to own it. And that's how you should look at it, not as an investment. There are plenty of other ways to invest your money. You're looking to protect it, get it out of the system with privacy. That's it.
I agree with you, Andy. You covered a lot of ground there. That's why I love you, because you don't just sell the precious metals, you really understand the economy, and you understand the way things are going in the economy, and why you're in the precious metals in the first place. That's why you're doing it, because you see what's coming down the pipe and you understand it historically. And it's great that you're able to bring that information to the program. I want to meet with you regularly next year if we can.
Oh, I'd love that.
One session, I just want to talk about cyber. Cyber is my bailiwick. You have a master's in information security. Let's talk about cyber. Let's talk about some of those other headwinds you're talking about. And let's really break it down next year for people. Let's go into a little bit more detail and talk about, why those are important. There's so many things that we won't have time to talk about today that people need to consider when getting into precious metals. It's such a complex argument for why they're so very important part of your portfolio. And it's not just what we talked about today. It's much, much more than that. Andy, any last thoughts before we wrap up the program today on just the outlook for silver and gold, where we've come the last 2 years and what you see for next year?
Okay, there was a mentor of mine who I learned how to think macro, and that was Richard Russell. And Richard Russell said for a very long time, long before it was very apparent, that there's only one path, and it's inflate or death, inflate or default. And if they don't inflate, then I think the whole system collapses. And so I think we're going to see a lot more of the same. I think we'll see lip service. I don't think we will see rates rise on their own, not on the Fed's watch. I think it'll be an event. And maybe they've already pre-planned that event. I don't know. But I think that this is the most important time to own gold and silver. As God is my witness, I believe everyone needs to own it. And they need to own it and think of it as wealth. And if you look back and see talk to a guy like Rick Rule, who you know and I know, and everything Rick has ever bought has been out of favor. Every successful investment Rick has ever made, he's a legendary investor. He'll tell you all the money he ever made is when everyone was going the other way and he bought something undervalued. And he told me personally about a big investment he bought that he thought was the place to be, and it got halved. And instead of selling, he doubled down on it. Now that's not what I'm telling people to do, but he doubled down on it, and he will tell you it was the best investment he ever made in his life. And this is the kind of contrarian you have to be. And he often talks about, if you're not a contrarian, you're a victim. And that's what you will be when this is all said and done. And if you don't see that right now, where asset classes are so distorted, where interest rates are manipulated to all-time lows, where money creation, where over 50% of every dollar ever created in the history of this country has been done in the last 2 years, then you're not paying attention, and you're thinking that the status quo will remain. And I think anyone who's wise in hedging their place in life would, even if that's how you believe, that we'll be okay and we'll pull ourselves out just like we always have. If you don't have a life raft before you hit the iceberg, you're dead in the water. And I really do think that people listening to this, I would hope anyone listening to Gold Silver Pros would own some gold and silver by now, but I just want everyone out there to know, as we look forward to 2022 and talking on a more regular basis, that from my perspective, gold and silver are not an investment, period. They're wealth. And they may perform like an investment, But in a world where everything is blown out of proportion and completely and totally distorted, you need to have some gold and silver as the bedrock wealth, and look at it from that perspective, not in terms of investing, but in terms of preserving and maintaining your wealth in really kind of a world gone crazy. So I appreciate the opportunity to be here. My association with you means the world to me, and I'm always just a phone call away if something crazy happens, and it seems to happen more often than not these days. I'd love to get your take on it as well, and chat about it here online.
Yeah, absolutely. Andy, thanks for having me on the program, or coming on the program before the new year and giving us a preview of what will go on in 2022. We'll have you back on regularly on the program, as we said. But have trusted you and the way that you run your business. Everybody that I talk to says you run it above board, and I've never heard a single complaint from Miles Franklin, the way that you guys do it. I've known you for a while, and you've been great. Your understanding of the market and all the work that you do with Dunnigan and Chris and Bix and all the people in reaching the market, we appreciate it. So everybody remember, you go to goldsilverpros.com, click on the precious metals deal link, and then click on Miles Franklin. Hit that web form if you're interested. They'll give you the very best pricing on whatever products they have available. Also, go to Miles Franklin, sign up for their newsletter so that you get that in your email inbox as well. Andy, good to have you on. We'll see you again in January.
All the best. Happy, healthy New Year, Rob, to you and yours. You stay well, and everyone out there, make it a great 2022, and look forward to riding through this together. And thanks again, Rob. Stay well.
Absolutely. You as well. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.